I'm Francis Gaskins with IPOdesktop.com, and they call me the Rumpelstiltskin of video interviews. He turns straw into gold, and we turn information clutter into organized insights so that you can make and/or save money. Today I'm joined by Blaise Fabry, who is CEO of ChinaVestor.com, which is a leading China ADR stock research site. Blaise is going to talk to us about the 6 steps towards understanding the difference between property bubbles in US and China. Blaise, how big is the China property bubble?
There's been a lot of argument that there's a property bubble building in China and it's ready to burst. Nomura analysts have been predicting it, but some argue that actually it's a good time to buy. So what is the truth, or what do I think is the truth about the situation in China? Well, we all know that property prices have been on a rise in China since November 2008, at a time when the Chinese government installed the stimulus package in the $580 billion magnitude. And so property prices rose around 15% nationwide in China since January 2009. And many argue that given that inflation is really low, around 3%, this is way above what it should have been. And there is a massive amount of apartments that are going to be unable to be sold at current prices.
What's driving the building frenzy?
US investors tend to forget or not to pay attention to some China-specific factors when it comes to the property market and the bubble theory, so to say. And that is that China has about 2/3 of its population still living in rural areas. So that means that these people are farmers and they are ready to move up to the ladder, move to the cities. So the underlying demand is just enormous. There is 800 million people eager to leave behind the fields and with oxen and just, the rice paddies, and they want to live in cities. So there's a huge driving force. Another aspect to it is that food prices has been on a rise in China. Farmers' income has been on a rise due to increased food prices plus higher yields thanks to advanced or more advanced agricultural methods. So the two together creates a huge class of people who has now financial means to move into cities. And this creates a pressure on a property market.
Now let's move on to the difference in mortgages between China and the US.
Another aspect that investors pay not much attention to, though they should, is that in China, mortgage applications and the mortgage structure is different than that of the US. For example, in China, there is no such thing, or there has never been such thing as a no income verification, zero down subprime loan. People in China or applicants to mortgages have to pay down 30% or more. Sometimes it's 50% down payment of the value of the property they are about to buy. So this not only helps them to lower the actual payments that are going to follow, but also gives a sense of security that is investors are not speculative investors, because they have a significant amount of financial means put into the deal that goes at risk if they fail with the transaction, versus the US, where someone just didn't put down anything, there was no income verification, and said, okay, worst comes worst, I'm not losing any of my money. So in other words, the speculative investment in China is much less than what we have seen in the US in a 2008 period.
Why the surge in China property prices?
There's one distinct difference between the US and China, though, when it comes to feeding the property bubble. And that is that in China, there's a sort of lack of alternative investment because banks are paying basically 0% interest. Inflation is very low in China. The target is 3% for 2010. First 5 months it was 1.7%. So banks really, it's just not a good investment for investors to put money in the banks. Number two investment in the US we have is equity markets. However, it's different in China because what's happening is that at least twice, Chinese investors got burned with massive bear markets. The last one in 2008 going into 2009, when the Shanghai Composite Index dropped from 6,000 points to 1,800 in 52 weeks. So investors or people with money don't have confidence that the equity market is the right way to invest, so they turn to the property market. And this is different from the United States.
And what if the China property bubble bursts?
There is another aspect to the Chinese property bubble, and that's being what happens if it bursts. We don't know if it exists in the first place or how big it is, but let's say it bursts and property prices is going to come down 20%. First of all, China's economy is much more export-oriented than that of the United States. In the United States, consumer spending is responsible for about 75% of GDP growth, which is totally different from China. So while in the US, the housing market cool-off had a tremendous impact on the economy, it's not going to be as severe in China simply because the economy structure is just different.
What stocks look good to you at the moment?
A lot of Chinese real estate developers that are trading at bottom low prices as we speak. Some of them are even the biggest or the largest in China, and they are listed in Shanghai Stock Exchange and in mainland exchanges and are trading at 25-30% discount versus January 1st prices. One of them is that I like is China Vanke, and this is the largest Chinese publicly traded real estate developer. There's another one that I like that's Shanghai Composite Index Heavyweight, so to say, that is Poly Real Estate. And but these are Chinese stocks trading in Chinese exchanges. So U.S. investors, unless they have either a Chinese passport or their wife or husband is a Chinese citizen, they have no access to it. So what U.S. investors can do is two things. One, they go for smaller players that are listed in U.S. exchanges, such as China Housing and Land Development. And that's a NASDAQ-listed Chinese real estate developer. And another one is not a real estate developer, but a service provider for real estate companies. That's eHouse Holdings. That's been creating a lot of buzz in 2009. It's a liquid stock, and I'm upbeat about this company as well. And finally, another alternative, so to say, for U.S. investors are ETFs. And there is one Chinese ETF, ticker symbol TAO, that is tracking mostly Hong Kong listed Chinese real estate developers, that is tracking the situation very closely. So if you are one of those that think that you are like a value buyer who want to enter the market at the lows, and any of these stocks that I mentioned to you or this ETF is a good buy right now.